Hello there, welcome to Weenie Trades. I hope you all had an amazing weekend. Today, I'm going to be breaking down stocks from the community. I'm just going to be analyzing the daily chart. I'm going to mark up the chart. I might be talking about expected moves, different options trades you could potentially take. I'm going to show some of my positions, and we'll move forward. So this is the weekly game plan, but more so a technical analysis from the community. So if you are a YouTube member or you have invested in the course, these will be tickers that you requested for me to break down. So let's get right into it. First up, we got a SPY. SPY for the week, the upcoming week. Let's check its expected move. Its expected move is about $8.10. So that's a pretty wide expected move, but also pretty reasonable. So that puts SPY, in the 460s, just around that 460 area on the upside. And then on the downside, yeah, we might see something like 444 on the downside, and that makes a bit of sense. So this is the range that we have to work with on the S&P. As you can see, there was this steeper downtrend, and it was pretty tricky because if you didn't buy pre-FOMC, I do think a lot of this rally, it's difficult to catch. You might be chasing just a little bit. But that's just my personal opinion. So we got higher lows, we got a steeper lower highs, we broke the steeper lower highs, and the pressure's just on the bears. The bulls are just really pressing it higher and higher and higher. So anybody with a short position is certainly underwater, and they're getting absolutely smoked. Hopefully you're able to watch last week's game plan, and I was saying 453 is the edge of the expected move on the upside. And guess what? 453 was the exact high of the week. So S&P, moving forward, I think if we do end up going up short term, we could probably see a short term snapback. If we are selling off, it might be a potential dip buy to start off the week. So that's on the S&P. I don't know if we can get past all-time highs, but it would be pretty amazing if they did. It would just be a complete 180 reversal. I think that the overall market, might just go sideways for a little bit, sideways to slightly higher, but there is still a chance of a rollover. We are not out of the woods yet on the S&P. Next up we got is the Qs, the QQQ. And similar thing, the Qs probably just going to be a little bit weaker than the SPY. I know it has a little bit more magnified ranges, but the QQQ, I expect it to probably pretty much mirror the SPY, but actually start to probably shift in some relative weakness, especially with what's going on with the rates. So the Qs, think of it as the similar analysis to the SPY, but expecting relative weakness. So if the whole market's green, I do think that this sector can shift out of favor. Let's check out Ethereum, ETH /ETH. And Ethereum over here, similar thing. First of all, Ethereum getting a bit of a drop, a haircut, 50% from its highs. I am still invested in Ethereum and just kind of dollar cost averaging, but I'm not being aggressive with my investing. I am staking Ethereum as well. But over here, Ethereum, it would be completely normal to see a back test of this former resistance area on Ethereum, and that would be at about 3,600. Otherwise, we're in still this big channel where our low points are about 2,400 and our high points are about 3,300. We're probably going to stay in that range until we can break out and test that next resistance before potentially pulling back. Or if we can get above and hold above that resistance, Ethereum could potentially get new all-time highs. I don't think that is the most likely scenario. I think the most likely scenario is that Ethereum goes sideways. If it does go higher first, it snaps on in, and it honestly could break support within a few months, especially with different regulations coming in on crypto. So those are just my thoughts on Ethereum. Next up we got is GameStop, GME, and boy, GME had an amazing week. Congratulations if you took any GME GameStop longs. People were asking me about my short position. I believe that was somewhere over here. Let's just actually quickly check. If we just scroll down. Oh yeah, how's my shorting going on GME? Well, it's actually not too bad because luckily I closed my short positions prior to earnings. I did take one more stab at it after earnings and got clapped just a little bit. But either way, GME was able to short last week at the 141 area and cover that at about 130 the very next day. So a nice little one-day short trade. Of course, it would have been better for the long, but that's just a short squeeze. I do think that eventually GME, it will end in tears and GME will be underneath these lows. Again, though, none of this is financial advice. I know that thing is not up there. Now it is up there. None of this is financial advice. I'm not here to tell you what to buy or what to sell. I don't care if you buy GME, if you sell GME. I'm just here to analyze the chart. And in my personal opinion, I do think that GME, you know, potentially even before the end of the year, will be underneath that $80 a share. There will be a scary liquefying drop. Or most likely, I can't say there will be. Maybe there is going to be another squeeze. If there is another squeeze, the short-term resistance coming up on GameStop is about that 169 level. So look for resistance. R1 on GameStop is 169. Other than that, though, if GME does get going, you know, the next resistance is about 197. I don't know if GME ever gets above 200 again, but that it still could happen. But either way, 197 is R2 on a squeeze. Be careful, though. There can be some wild whipsaws on GameStop. But the expiration for this week, $27 is the expected move for GameStop. So that means, yeah, we could see GameStop at that like 180 area, or we could see GameStop, you know, at this like 126 area, 125. So that's the support area, 126, 125. We also can go sideways in price short term. But if I had to make a prediction, which I sometimes do, but it's just a prediction, doesn't mean anything besides that. Maybe we go sideways to slightly higher, just a little bit short term. We go sideways a little bit. We start to pull back. We put in a lower high, and then we zigzag off into nothing. The volume on GameStop is likely to dry out, although this last week of price action was very good for GME. Congratulations to the apes or the GME bulls. Hey, I wish nothing but the best. But just know that this is only short term in nature. I do think that GameStop and AMC will end in further tiers. So that's GME. Next up we got is Tesla. Tesla, nice good move, you know, from just like the recent pivot low. Tesla up 37%. If we're measuring from the war day low, Tesla's up over 50, almost 50%. So this is a crazy move. And look, we're up 1, 2, 3, 4, 5, 6, 7, 8, 9 days, basically. And I was trying to get a little bit cheeky. Normally, when you see something go straight up, it can come straight down. Now, I'm not expecting Tesla to go straight down or just immediately and retrace 100% of the move, but I was looking for a decent little pullback. Of course, though, after a big up move, you can correct through price in time, and that's through going sideways. Well, I was not expecting Tesla to go sideways for basically 3 days after such a massive run. So I was taking a short position on Tesla. If we zoom in on the hourly time frame, I took a short position on Tesla with put options and put spreads at about 1,015. And as you can see, I'm just trying to get just a little bit of a drop. You know, if we do something like just retracements over here and measure from this low to this high, a healthy Tesla pullback for it to still be in an uptrend would be if Tesla pulled all the way back to something like this 930 zone. So Tesla 929.66, that would be a healthy pullback. But if you want to see my position over here, I did get absolutely wrecked. One of my bigger losing trades, minus $589, and that's from Friday. I am just, you know, having this big jumbled short position over here, but it's not too big. My deltas are -9. So it's kind of like I'm taking a $10,000 short position on Tesla through -9 shares. But either way, Tesla absolutely clapped. This is one of the trickier things about trading is because my costs, I have increased costs of living. My account size, therefore, gets lower and lower as I need to pay for those increased costs. As my account size gets lower and lower, I am trying to overcompensate by risking more. My risk is increasing per my account size. So I'm trying to get more risk-adjusted returns with less money. And I think that that's affecting me a little bit psychologically. I'm being a little bit more emotional than I probably should be on the live streams. But I just need to recognize that and overcome it. Either way, though, I do think, with that being said, Tesla, I definitely do think that it can drop like a rock. And that's only if the market pulls back. I think the overall S&P 500 really held up Tesla. And so I think that if the S&P pulls back, Tesla can see that just mild drop down to 930. Let it be a dip buy if you want to buy Tesla, and then it can do something like that, or it can do something like this. But either way, hey, not all trades are winning trades. And sometimes you just get chopped out and stocks just go sideways. Sideways patterns are usually my biggest weakness. And the question becomes, how quickly can you identify that it's a sideways pattern and not a pullback pattern? Because like right here, it's like, who is this going to be the pullback? Nope, back into the range. Who is this going to be a pullback? Nope, back into the range. So it'd be pretty interesting to see, but bullish on Tesla. It could get a breakout over like 1023. Otherwise, Tesla can flush pretty nastily underneath 990. So 990 on the downside and 1023 on the upside. Next up we got is Berkshire B, BRK/B. And this one's been a beast. Just all-time highs each and every day. Look at this. Scenario for Friday. Break above, hold above, and then go. What do we do? Look at this. Break above, hold above, then go. Sticked it a little bit, but then went closed right at the high of the day. So Berk, wow, amazing move. Just, you know, stair-stepping higher. Stair-stepping higher, and we've been just saying this thing's been bullish. I do think that it is a little bit too extended to chase up here. You know, if we check something like the expected move for this upcoming week, it is $8.27. And that seems about fair. You know, 366 on the upside, 351 on the downside. Yeah, so that's the kind of the expected range for Berkshire Hathaway this upcoming week. You know, if it ever came back to, you know, something like 330, I do think that that could be an investable dip buy. But other than that, yeah, if we look at the weekly time frame, that is a nice good weekly breakout. Yeah, dip buy is 330. Otherwise, you're either already long and you're in it. I would just be trailing it up, trail it up on the weekly. And if you're short, GG. I don't know who would be short Berkshire Hathaway, but maybe. I don't know. But either way, nice move. I'd expect the trend to continue and mirror the S&P. Maybe it has a little bit of strength when the S&P is green, and maybe it has a little bit of weakness when the S&P is red, but maybe less weakness than the S&P 500 if there is to be a pullback. So that is Berkshire Hathaway B. Let's check out CVX. Hey, nice good move. Chevron, shout out to Ryan, catching those covered calls at the top of the market, gets paid to take profits, and you get to hold on to your shares, and price just corrected through time. Nice good move. And now we're already coming back to that high. Wow, nice good move. I'd expect CVX to probably follow the price of oil, which briefly want to analyze. CL, I do expect just consolidation from this point. So CL, nice good move. Actually, my oil short top ticking the high of the year and then taking profits on the next 2 days. That was my best trade of the year. So let's get some more better trades of the year. But either way, drop, bear flag, drop, kickback rally. I'd expect just zigzag. So maybe even a short-term pullback in oil and then just a tightening range where we make higher lows and then lower highs on oil. So if we go to something like CVX, Chevron, I expect something like that where we make lower highs and then higher lows. So high, low, potential lower high, but then we can pull back and find a higher low, and then we get into a tightening range on CVX. Otherwise, you know, if you are looking for the breakout, it's a bit aggressive, but over 171, daily close above that. If you are looking for the breakdown, it's probably going to come underneath 157, but I don't know if we're going to get a breakout or breakdown anytime soon. Nvidia had an amazing week last week, kind of just pinching that range. We break out. A nice little flag setup just about Thursday, and we were talking about it on that day. We're like, hey, Nvidia's pretty relatively strong. It just did a wedge break to the upside. Nice, good move. And it just did a beautiful 5-minute flag, and it just kept stair-stepping higher. But breakout, back test, breakout, back test, breakout, back test. It just kept on stair-stepping higher. This is one of those ones where if you can recognize early that you've caught a trend, this is where trail stops on a higher time frame really work out well. You can ride this thing for as much as you can, and you wouldn't have been tagged out probably until Friday. You got to ride all of that upside on Nvidia. So Nvidia, way too overbought in the short term, if you ask me. I do think it could go a little bit higher if the S&P is pushing higher towards that 460s area, but 295 is the next area of resistance on Nvidia that I see on the chart. And then support, I wouldn't think about buying Nvidia until we got back down to something like 243 on Nvidia. So that's Nvidia. Let's check out AMD. AMD over here. Similar thing. AMD is just a little bit weaker than Nvidia, I've noticed. If I had to pick trading one of the two, I'd go like for Nvidia long or AMD short, depending on what the market is up to that day. But AMD, you know, what's the expected move for the upcoming week for AMD? $7. That's a decently wide expected move for AMD. I don't know if we can go that high, but either way, we could see something like 126 on AMD to the upside, and that checks out. That lines up just about with this little resistance area and this area right about here, 120, 125, 126. And on the downside, we could see as low as 112. I would not buy a dip on 112 on AMD though. That would be just dropping just a little bit too much for the structure of it. So if I had a choice, Nvidia over AMD for the long side. For the short side, AMD over Nvidia. Let's check out TSM. TSM, Taiwan Semiconductor Manufacturing. Wow. See, now this chip, this semiconductor maker, looks a little bit weaker. Look at this big bear flag. Do you see it? Nasty drop. That creates the flagpole. A counter trend sideways consolidation of vibration. We get a breakdown. Not the best increase in volume. Generally, you want to see a good increase in volume on the breakdown, but nonetheless, a good drop, drop, drop. Now we're just awkwardly pitter-pattering higher. We probably stay within a range on TSM. We probably stay underneath something like 110, but we probably stay above something like 97. So TSM, definitely one of the weaker names. I wouldn't short it, I wouldn't long it, I wouldn't touch it either way. Smaller expected move on this one of $3.97, so about a $4 expected move. So that means you could see TSM at about 111 on the upside, and you could maybe see TSM at about 102 to 103 area on the downside. So TSM, yeah, there's better stocks to trade. I don't know if I would invest in it, although it does pay a dividend of 49 cents a share. So that is TSM. Let's check out Ford, F over here. Ford, kind of just a bearish chart. We talked about a short setup right underneath that 20 because we had a nice good structure that we broke out from. We talked about the false breakout. Keep an eye on for a false breakout. Ford had a beautiful false breakout right up top over there. A drop, a bear flag, a drop, a bear flag, a drop. And now we're just consolidating, pitter-pattering underneath resistance. I bet Ford just goes sideways to slightly lower based off this chart formation. And so, yeah, maybe there's a dip buy on Ford if it could get back into like 1450, but that's about it. Looking at the weekly, or let's look at the max time frame over here. Max, yeah, sideways to slightly lower for Ford. Got a little bit too carried away too quickly, and now it's just unwinding late buyers. Short term though, you need Ford to get above 1682 and hold above it if you want to see it continue a little bit more of an uptrend. So that is Ford. Let's check out ALB. Able Marble Corp. Very interesting hourly time frame. Okay. So this one's a little bit all over the place, although it does tend to hold trends a little bit nicely. Do you see that? Nice, good 26% move. Kind of looks like Tesla. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. Generally, when a stock is up 9 days in a row, it's probably going to get clapped, or at least pull back or go sideways. Next resistance is about 221. Then there's this big gap window over here. And the gap fill would be about 245.60. I don't know if it can get up there. You'd be lucky to see this stock really get much higher than about 228. So ALB, 228 is resistance. Otherwise, we're looking for a pullback or sideways action anytime shortly. And so right over here, 201 is going to be that support area if you wanted to buy ALB. But other than that, yeah, not the best, not the worst. Let's check out Riot. So this is going to follow Bitcoin and its related activities. Riot, I'm not a big fan of the miners. It looks like we're already pulling back. While the market was having a party on Friday, Riot is just kind of over here just being like, yeah, I'm going to be down 3.62%. Like, okay, buddy. So if it is breaking out, I would expect it to potentially get as high as 24.67. Otherwise, on a pullback, you can look for a dip buy, potentially at 17.15. I would stay away from Riot, me personally. I just think there's much better things to put my money in. So but that's just my opinion. Let me know your opinion on Riot and why I should buy it or pay more attention to it in the comments below. So over here we got BBBY. BBBY, very interesting choice. You know, if we just take a look at the daily time frame, look at this massive gap up. Look at this. It's done it twice. Look at this. So just from this support level, wow, 87%. Look at this. From support again, it's like all right, guys, everybody got your shares? Have we gobbled up all the liquidity? All right, run it. And they certainly ran it on BBBY. But Bed Bath & Beyond, I don't think it will be a company that we're talking about in 10 plus years. So I do think that BBBY is probably going to zero. Again, no, this is financial advice. I'm just giving my trajectory, my forecast, as you say. So zero, on its way to zero. So that means, yeah, probably just for now, short term stays sideways. There is a short-term bull break above 26. There's a bear break underneath 20. And otherwise, we're probably going to stay above 20, but beneath 26 for quite some time. So that's all I have for this Sunday's video. Hopefully, you guys all had an amazing weekend. Here's Parker over here. I am going to do a review on the Forex Trading Quick Start Guide written by Troy. Amazing book. I can't wait to share my thoughts on it. Lots of valuable lessons in here. Maybe I'll pick up Forex trading too with the newfounded knowledge. Other than that, I'll keep you updated on Weenie Trades schedules. Keep being active in the Discord community. Keep being active in the chat at the Weenie Trades live stream. And comment below. Tell me what you're watching. Tell me about your weekend. Alrighty. Oh, wait. Oh, hey, look at this. I just saw this before filming. I'll get you in. Oh, CCL. I almost finished filming. Let's grab CCL real quick. So CCL, you're in puts clues. Hey, nice stuff. I think that looks like a potential rollover formation. So look at this. High, low, lower high, higher low, lower high, bear break. Kickback rally, still lower highs. Still lower highs, even though it's trying to make a higher high. We break down, and look at this. Textbook resistance rejection. This is a bear pullback. You can short right there. If I was short, though, with like you said, with your puts, my stop loss on those puts would be if we started to break last week's high. So what was last week's high? You can just go to the weekly time frame. Last week's high was about 1950. So if CCL is at or above 1950, I would not partake in those puts. It means that we are not rolling over and we could be breaking out and just chopping and flopping all around. Just remember, though, when you're in puts, you want the stock to absolutely tank and flush far past the expected move. If the stock goes sideways, you get clapped, as you saw by Tesla. It wasn't really so much that Tesla didn't drop that I was losing money on it. It was that it wasn't so much that Tesla was screaming higher. It was that it just was not dropping. It was going sideways in price, which means you lose money on put options. So be careful with those. But 1950 is your potential stop loss level. Otherwise, hey, it looks good, like it should roll over. It's going to be very dependent upon the S&P 500. Alrighty, thanks for tuning in. See ya.